Hey everyone, I wanted to start this video with one of the reasons why I think a lot of investors are talking about Microsoft stock, and that is its capability to gain market share in search. So let's start with that, and then I want to talk a little bit more about why everyone is talking about Microsoft stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so like I highlighted, Microsoft and its artificial intelligence infusion in its search engine is allowing it to gain market share from Google. And Microsoft telling investors that we once again took share across Bing and Edge as we continue to apply this new generation of artificial intelligence to transform how people search and browse. Bing reached over 140 million daily active users. Now, while that might seem like a lot, Alphabet's Google has over 1 billion daily active users in search. So Bing is gaining market share, and that was expected once they announced the infusion of artificial intelligence and the improvement in their search engine results with artificial intelligence. They are gaining market share, but Alphabet's Google is still the dominant player in that industry. Microsoft may continue to gain market share in this industry incrementally. Alphabet has yet to respond with an effective response in artificial intelligence. They've mostly fumbled the rollout in AI, and so Microsoft is capitalizing on this front. What's more, their free Copilot apps in iOS and Android saw a surge in downloads after their Super Bowl ad and are among the highest rated in this category. And that's really stepping on Alphabet's toes here. Remember, Alphabet's Google pays billions of dollars to Apple so that it can be the default search engine on those devices. And if Microsoft is gaining downloads after announcing their Copilot app and offering their Copilot app for free on iOS devices, that's really stepping on Alphabet's toes. And undoubtedly, people are going to use Copilot when they download it to supplement or replace some of the search that they would do just on the default search engine on their iPhones or iPads or whatever Apple device they might be using with iOS. Now, looking at Microsoft more broadly, their third quarter revenue came in at $61.9 billion, which was up 17%, and earnings per share was up 20% to $2.94. And these results exceeded expectations. They were really better than what Microsoft and investors were expecting. One of the bright spots was in commercial business bookings, which increased by 29%, and that was significantly ahead of expectations. The difference between bookings and revenue is a matter of timing. Bookings are contracts that Microsoft signs that have yet to be delivered. For instance, let's say you sign a 3-year contract with Microsoft for $300 million. Microsoft will then incrementally count that $300 million as revenue as time goes on. So it'll split up that $300 million between 36 months and take a monthly revenue based on the incremental service provided in the contract period. So when Microsoft reports increasing bookings by 29%, these are eventually going to turn into revenue. So it's a good sign for Microsoft's revenue going forward. And undoubtedly, a lot of investors were excited about the surge in bookings. And it's always a good sign when a company's bookings increase by faster than its revenue, right? And which is what you see with Microsoft. 29% increase in bookings, 17% increase in revenue. It's even more favorable when both of these numbers are rather large. And for Microsoft, they are rather large because you're dealing with a business with over 100 billion in annual revenue, at over 200 billion, I should say, in annual revenue. So growing that size of a business by nearly 20% is more impressive than growing a smaller business at that same rate. So these numbers really had investors excited. So Microsoft 365 Suite strength continued to increase average revenue per user for their Office commercial business. And they've highlighted that they've been raising the pricing on some of their Microsoft 365 products, especially those that are infused with Copilot. And many customers are choosing this service, which is increasing the average revenue per user because of that new offering. It's a new service and customers are willing to pay up for this new service, and it's turning into a higher average revenue per user. Now, I highlighted earlier bookings, right? So when Microsoft signs a new contract, it goes in as bookings. The remaining performance obligation, or RPO, is the cumulative balance of those bookings, how much they've all added up, okay? So commercial remaining performance obligation, or RPO, increased by 20% to $235 billion. So Microsoft now has $235 billion in those side contracts or remaining performance obligations that will eventually turn into revenue. And that increased by 20%. That was a solid increase. And Microsoft highlighting that roughly 45% of this will turn into revenue over the next 12 months. So over $100 billion of this remaining performance obligation will turn into revenue over the next 12 months. So Microsoft has done a great job in adding new business to its remaining performance obligations, signing new contracts, and really getting a leg up and acceleration in revenue growth. And you're starting to see how artificial intelligence is boosting demand for Microsoft's products. And you're seeing that across the board with companies that are offering these services, including, I recently reviewed the results for Alphabet, and its cloud segment is doing really well. Amazon and its cloud segment, AWS, demonstrated accelerated growth, right? They previously grew by 12, and 13% in the last 3 quarters. And in the current quarter, they grew 17%. So 12, 13, and now 17, a big jump up. And Microsoft demonstrating a jump up. And you're seeing tangible increases in these companies' revenue, profits, and cash flow coming on the back of the rising effectiveness of artificial intelligence. And that's why I've been saying that AI, this investing trend, has legs under it. It's grounded. It's grounded in actual benefits it's providing business. It's not just some hype, some thing, some meme or something like that that's boosting valuation, boosting prices of stocks without being grounded on anything, without having any legs underneath to stand on. Artificial intelligence has those legs. It has companies shelling out billions of dollars to add these services because these services are helping these companies either save money or offer a better experience for the same amount of money or add incremental revenue services in the case of Microsoft. So all of which has a lot of investors talking about Microsoft stock as one of the companies that's on the front lines benefiting from this rising effectiveness of AI. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.